Hello, 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 hello. Good evening. Happy Wednesday. I see us all joining in. I'm so very, very, very excited to see you all. Hello. We are pouring in. Okay, I'm going to share my screen and put our slides right on up as we are coming in. We are introducing ourselves. Very excited to have everyone here today. All right, let me share this screen. Oh, this looks crazy. All right, let me just make sure that you guys can see the accurate thing. Always a seeing a glitch. Hello, hello, hello. Okay. Let's do. Want to make sure. Hi, everyone. Of course, I'm sharing this window. All right, I think we can see my screen. Let me see. All right, can we see the screen? Let me know in the chat if we could see my screen. Yes, I'm so happy to have you all here as well. You guys are so engaged. I love it. Can we see the screen just before we get started? Yes. Okay. Cindy says yes. All right. I'm going to go over here. As we are all, I love it. I love it. I love it. I love it. Okay. So, what I want you to do in the chat for me as we get started. Okay, I am Melissa. I'm going to be your host this evening. Welcome to Best Ways to Repair Your Credit Score. What I want you to do in the chat, which we already started doing, I want you to let me know where are you joining from and one thing you're excited to learn during the workshop, right? So where are you joining from? I am based in New York. And one thing that you are excited to learn during this workshop, drop it in the chat. Let me read a couple of answers. And the chat has a delay. So if I look like I'm leaning over, all right, we can see the screen. So let me know, where are you from? We've got Texas in the house, Michigan, Pennsylvania. We got Raleigh, North Carolina. All right, how to fix our credit. Fastest ways to repay credit. I love that. I'm excited to learn how to improve my credit. We got Westchester, New York, Denver, Colorado, Newark, New Jersey. Abby says, I'm excited to see what pointers I'm missing out on and learn new things financially. I love it. I love it. I love it. Okay, we got Rochester, excited to learn financial literacy. Fantastic. So let's dive right in as people are making their way through. It is a school night, a work night, so I know that we want to make sure we stay on track, and I want to leave plenty of time at the end to answer questions. So as you are watching, if anything pops up in your head, if you're confused or you have a question about, on the right-hand side where you're typing in all of these amazing engaged responses, you can drop your questions right in there. There's a little question box to specifically ask a question, or if you just want to ask in the chat, that is fine. So let's get right into the table of content. So the first thing we're going to cover today is why credit matters. I'm sure we have a pretty basic understanding, but we really want to know how detailed and how important and how impactful it can truly be when it comes to navigating credit. And then we're going to tackle our credit score basics, right? So what are some credit score factors that we know, what we may not know? What are some myths, some misconceptions? Fixing errors, right? We really, really want to know how to spot and identify any mistakes on our credit report that can really be hindering our progress. And then we want to make sure we know how to dispute those errors. And then, of course, resources with apps, tools, and more. And then at the end is your time to shine. Ask any questions that you need to. So my 3 workshop goals here with you this evening. First is that you understand your credit score factors. So I want you walking away knowing, feeling confident and comfortable that you know exactly what impacts your credit. The second thing that we want to achieve today is learn actionable repair strategies so that when you sign off, when you log off today, you can go and take that first step and you understand what you need to do step by step by step without feeling overwhelmed. And then our third goal for this evening is to access tools and resources for long-term success. So I don't want you to just feel empowered today. I want you to feel empowered a year from now, 2 years from now, having all of the materials from this workshop. So why does credit matter, right? So your credit score is more than just a number that helps you get approved for borrowing money, which is typically what we hear when we think about credit, like, oh, I need to take a loan. Let me make sure my credit score is good. I need to go buy a car. Let me make sure my credit score is good. But it leads into a lot more things. So housing and employment. I know people are like, well, I'm not borrowing money in order to rent an apartment. I'm not borrowing money in order to get a job, but many landlords will check your credit during that process to make sure that you are credit worthy or trustworthy in order for you to rent that apartment. Some employers, especially in the financial industry, they want to make sure that your credit history is showing responsibility and financial responsibility and reliability. A good credit score is going to allow you to access a lot of these things that you might be hindered from doing now. It also helps with insurance premiums. So that's your homeowner's insurance and your car insurance. They check, and I was very surprised when I got my renewal and they told me, hey, we checked your credit just to make sure that we are giving you the best possible homeowner's insurance, even though I'm not borrowing money for my homeowner's insurance. So we want to make sure that you're getting the best insurance premiums possible, the best lending rates if you're buying a car, if you're trying to purchase a home, and that you can access any type of employment and housing that you're looking forward to achieving. Now, 2 answers I want us to drop in the chat. We want to stay engaged. I work together for the next 60 minutes. So let me know, what do you think has the biggest impact on your credit score? And then how many factors do you think impact your credit score, right? So those 2 answers, what do you think has the biggest impact on your credit score? And how many factors do you think impact your credit score? Let me back on out, see how we're doing in that chat. Oh no, we can't see the slides. Oh my goodness. All right, let me make sure that we can see this properly. As you're dropping those questions, I'm gonna make sure our screen pops up. So those 2 questions again, what do you think has the biggest impact on your credit score? And how many factors do you think impact your credit score? Right, so let's make sure, let's get this screen on and pop in correctly. We're gonna take a little quick tech adjustment. All right, let's see. Webinar Jam is always being funky with us. We're dropping in those answers. Okay, so I see credit card utilization, debt to income, right? So there's 5 different factors: debt ratio, collections, someone said collections, payment history, and 4 factors. Payment history, Mia says about 5 factors, Mike says 6 factors. Okay, so we've got a couple of different answers here. Let's make sure that we can see our slides so we can see the actual answer. All right, I'm going to try one quick thing. I apologize for the delay here, but I think this option will work. Okay, so as we're waiting for this to properly upload, the correct answer is 5 factors, which I will put up on our deck right when the slides load, right? So there are 5 factors that impact our credit score, and we're going to talk about each factor, the percentage that impacts your credit score, different things that you do or don't do that may impact those factors. And the biggest factor, the thing that really, really changes and moves your credit score the most, is payment history. So yes, some of us got it absolutely 100% correct. Okay, let's see. All right, you should be able to see this now. I think we got it. Yes. Okay. So 5 factors that are impacting your credit score, and the factor that impacts it the most is payment history. Wonderful, right? So let's look at these credit score factors, right? So the first one, like I mentioned, payment history, that is 35% of your credit score, which means everything else is impactful. Everything else really goes into it. But if you are not paying your monthly payments at least the minimum on time, that is going to have the biggest negative impact on your credit score. The next is credit utilization, right, which is 30%. And that is how much of your available credit do you have remaining, right? So the general rule of thumb, and we'll talk about credit utilization a little bit more, but the general rule of thumb in the finance world is that you use less than 30% of your available credit. So we're going to actually look at how to do that formula, how to do that math to make sure that you're staying beneath that 30% so that you can have a great impact on the credit utilization factor. The other three pieces are a bit smaller, but they are just as important. It's going to be length of credit history. So that is going to impact 15% of your credit score. And that one is a little harder to navigate because if you are, let's say, 22, you may not have a long amount of credit history because you're 22 years old. So as you get older and as you continue to practice really healthy financial credit behaviors, credit habits, then your length of credit history is going to automatically be a positive aspect in your credit score. The fourth factor is going to be credit mix, which is 10%. And what that means, what they're looking when they're looking at credit mix is what are the different types of credit that you have? So you will have revolving credit, which would be different credit cards. You may have a student loan. You may have a car loan. You may have a mortgage. That is going to be impactful in your credit mix. And then the last 10% is new credit. So when we talk about new credit, that's going to be when we talk about soft inquiry versus hard inquiry. How many new credit lines do you have open in how short a period of time? That is going to impact 10%, right? So I had someone who says, if you max your card, do you pay before the due date to show full payment period? I love that question. That'll be the first question I answer at the end, Damien. I did not forget you. I'm going to put it right at the top of my head. That is a fantastic question. Payment history, right? So here are a couple of things that go into payment history, and I'm going to tap in a little bit into Damien's question to kind of give you an idea on how to navigate that. So what it means, your payment history is reflecting basically how often you've paid your credit card or your debts on time. And the reason this is weighed the heaviest is because lenders want to know, hey, if I'm giving you more money, I need to take a look and see how you've been navigating paying back the other money that you owe. Because if it's looking a little shoddy, if it's looking like you missed a payment or two, I don't want to take the risk and give you more money to borrow, which is why it's weighed so heavily. They often consider the late payments, but they also look at how severe the late payments are, right? So is it in collections, which someone mentioned collections earlier? Is it in collections? Are you in default? So how serious is the payment history looking like, okay? Now, a couple of tips to improve payment history, and Damien, I got you, I didn't forget, right? So automate your payments. A lot of times when you get your payment, you'll say, okay, I pay it by the due date, but the trick is to actually try your best to pay by the statement close date, right? So if you don't know that that is different, I want you to look at your credit cards. I want you to look and make sure that you see that there's going to be a due date and there's going to be a statement date. And the reason why it's a nice little trick to pay by the statement date is because your lender, your credit card company is going to say, hey, this person paid this and they paid it on this date, so we're going to say that their balance was less than what it was, right? So if I owe $5,000 and it's due on January 1st, but my statement closed on December 30th, I'm going to try to pay it on December 30th, pay it completely off, so that when my lender goes and reports it to the credit people, it's going to say, oh, shiz, is zero balance. So it's going to show a great payment history, and it's going to show that I have not utilized any credit. It's going to have my credit utilization really low. So you always want to pay by the due date the latest, but if you can, you could pay by the statement date just to get that little trick to make sure you're like, okay, I made sure I paid it, and they're going to report really positively to the credit report people. Let's go to the next slide. So credit utilization, we're going to look at this formula. When we're talking about credit utilization, it's not only based off of one credit card. So if you have multiple credit cards, they're looking at the entire line that you have available, the entire line of credit. So for example, I have 3 credit cards. I have the first credit card has a limit of $1,000. I have the second credit card, it has a limit of $5,000. And I have the third credit card has a limit of $10,000. That means my total line of credit is $16,000. And so what I want to make sure that I do is when I look at the balances, I add them all up and then I divide by my total amount. So if I have $2,500 balance, I'm dividing that by 16,000 and I multiply by 100, I'm using 15% of my credit. So that keeps me below that 30%, so that when they do report it back, say, hey, this person has this balance, the credit lenders are going to say, okay, they're below 30%. This is positive. The closer you get to utilizing 30% or higher, the more negative of an impact it is going to have on your credit score. It is showing that you're getting a little closer to that limit. Now, again, that same trick that we mentioned for payment history applies the same for credit utilization. You want to try to pay on the statement close date, if you can, if it is possible, the statement close date, so that when they go to report, you're not going to have a balance if you pay it off in full. They'll report that zero. Or if you pay, let's say you can't pay off the full thing, which is okay, it happens. If you pay that payment, now it'll have a lower credit utilization by the time they go to report to the credit people. I call them before they go to kind of snitch, right? But they're really just reporting your patterns. Okay, now why it matters, high utilization indicates, again, a higher risk. So when lenders are looking, they're like, hey, you don't seem such a safe person to loan to. I'm not sure I'm very comfortable in giving you more money. Okay. Best practices, like I mentioned, stay below 30%. You also want to pay down your balances as early as possible. And the third and final step, I always say this with precaution because we always do things that are the best possible outcome for our financial circumstances with caution, is to ask for a credit limit increase. That doesn't mean we spend more. Okay, so we don't need to spend more just because we have a credit line increase. But what it does, a little mini trick, right? We're talking about tricks this season that work. Another trick with increasing your credit limit is that now this formula is going to be different, because now if I ask credit card 3, like, hey, can I have an increase in my limit? And they say, you know what? You have a great payment history. You've been with us for a while. We're going to increase your credit limit to $15,000. That doesn't mean you have to spend more, but now you have an extra $5,000 added to your total credit limit. So with a $2,500 balance and a $21,000 total credit limit, your credit utilization percentage goes down, right? So that's a little trick, because we're not adding more, we're not spending more, but we are just making sure that our credit can be in the best possible shape as possible if we were looking to make a next major big move, right? Like if we're trying to purchase a home. Additional credit factors. So these are called the mini but powerful, because they are extremely important, but they do not weigh in as heavy as the first two factors we just discussed. So length of credit history, which is 15%, what they are saying, like I mentioned, is how long you have had or navigated credit in a really healthy, positive way. This can be tricky when you're young, but it's not impossible, right? So what you want to do, because this is where we hear a lot of those misconceptions or those myths where, oh, I paid off my card and my score dropped. That definitely possibly happened. I believe you, but it's not because you closed the account. What happened is you impacted one of the factors, and it could potentially be the length of credit history. So for example, for myself, my first line of credit was actually my student loans. I got them when I was essentially 17, about to be 18 for college. And when I paid off my student loans in 2018, my score dropped a little bit because now the length of credit is lower because I did not have credit. I had my student loans, and then I opened my first credit card a little later. So that 15% was a bit of an impact. It was amazing to be done with the student loans, right? So I would say if you can keep the account open after you pay it off, absolutely try to do so, even if you never use it. This way you're building length of credit history. The credit mix option can be a bit tricky because a lot of times things like student loans, things like a car loan or a mortgage, once you pay them off, the account closes, right? Same thing for length of credit history. So if the account automatically closes, there is not really much you can do, but you want to just be mindful that this is only 10%. So yes, it's going to be a bit frustrating and a bit annoying if your credit score does drop a little bit and you're doing all the right things, you're paying off your debts. But the two biggest factors those 65% are still what you want to try to focus on because they'll have the bigger impact. And then the last is new credit. So what's measured is the number of recent credit inquiries and your new accounts opened. So if you are looking for a car, if you're looking for a mortgage or anything like that, and they run your credit to approve you for a loan, that would be considered a hard inquiry. However, if you are checking your own credit score or you're pulling your own credit report, that would be something called a soft inquiry. So that is not going to be a new line of credit, right? You're not giving yourself a new line of credit. So it is not going to have that same fact or that same impact. When it comes to hard inquiries, what you want to be mindful of is that they tend to stay on your credit report for 24 months. So for 2 years. So if you open, let's say, a brand new credit card today, that inquiry is going to stay on your report until 2027, right? So we just want to be mindful. And a few tips to improve: you want to limit your hard inquiries as much as possible, and you want to plan your applications strategically and space them out if you can, right? Again, this is all doable based off of what you can do, what you can accomplish. How to spot and fix errors on your credit report. Now, this is extremely important because this is where a lot of times people get confused, they get frustrated, they feel like they just want to give up, they feel like they have no really anything that they can do, but you can. And we're going to walk through tangible, actionable steps. So grab your notebook, your pencil, your iPad, whatever you need to use, okay? Because credit reports are more common than you think. It does not mean that you are bad with money, does not mean you're bad with credit, doesn't mean you have bad luck. It happens more than we think. So let's go over a couple of things to spot and what you could do to reach out to have them fixed. So very, very, very common credit report errors that anytime you check your credit report, right? So if you're going to check your credit report in the next week, tomorrow, whatever, you want to take action, I like it. These are things that I want you to pay attention to because these are the things that are often wrong initially, okay? So account errors. So any accounts that are listed that don't belong to you, you're going to want to address that immediately, right? Because it's like, I did not open up this credit card. I don't have this debt. This should not be on my credit report at all. Any duplicate accounts. So if you're seeing, yes, this is my account, but it's on here twice, that is a common error and it's very quick to fix and adjust. Or incorrect account status. So if you have paid an account off, or if your account has a different amount due, let's say you owe more than what you owe, that is an error that you want to pay attention to. So if you go through with a highlighter, pen, pencil, annotate however you want, but comb through to make sure that everything is accurate. Payment errors is another really big factor that will tank people's credit score because payment history is so important, right? Like we mentioned earlier. So you want to make sure that payments are not incorrectly marked as late or missing. And you want to make sure that the balances are accurate to what you know or that what you have records on. Personal information. I have a very, very popular last name. And unfortunately for me and my family, we have very similar initials. So personal information on your credit report, especially when you have a family or a very common familial last name, you will see a lot of errors that pop up, which will typically then cause other account errors on your. I've had my cousin, I've had so many people in my family where I'm like, I don't have this account. This is my cousin, this is my aunt. Okay. So if it's the incorrect name, address, or social security on your credit report, that is absolutely something we want to make sure that we fix. Fraudulent activity, accounts opened without your knowledge. Absolutely not, right? So here's what we're going to do. Here's what I want you to do if you spot any of these errors on your credit report. The first thing, you're going to go to annualcreditreport.com and you're going to pull a free credit report. You could do that tonight. You could do that tomorrow, this weekend, whenever you have the time. What they're going to do is they're going to give you a credit report from Experian, Equifax, and TransUnion. The reason it's important for you to get all three, especially when you're trying to get a mortgage or a car, they will pull from all three. You will say, oh, my Experian credit score is 740. My Equifax credit score is 710, but my TransUnion credit score is 500. Something's wrong, right? So it is normal for them to be a little bit off. They're not always the same number, but it is not normal for them to be drastically off, right? So if you see something where it's just like, why is one credit report completely different than the others? That's a big red flag. You're going to review that report carefully for any discrepancies like the ones we mentioned over here on this previous slide. So you're going to look for those first. Then you're going to gather your documentation, because if you say, okay, this is not my account, you need to have proof that shows, hey, this is not my account. Or if you say, hey, they're missing a payment or this balance is higher than it should be, you should have either a bank statement or payment receipt to corroborate that story. You want to highlight the errors on your credit report and you're going to prepare a clear explanation. You can do this 100% for yourself for free. You do not have to pay someone to do it. Then you go and you file a dispute with the credit bureau. So you're going to contact whichever bureau has the error. If it's on all three, you will have to contact all three, and you're going to provide a copy of the credit report with that mistake, right? So highlight, annotate however you want, the supporting documents to show like, hey, this is a mistake, this is what it's actually supposed to be, and then a formal dispute letter explaining the issue. Then the bureau will have 30 days to investigate and look through everything that you've mentioned in your letter, and they have to get back to you within those 30 days and tell you, okay, we investigated, this is what we found out, and we're going to remove it, or we investigated, we need further documentation. They're going to have to give you that response. Check for updates and ensure the corrections are made. So after the 30 days, after they've responded to you, pull another credit report and see, okay, now this is accurate. Now my scores are completely correct. Now I know that if I go apply for a car, I'm not going to be confused or ashamed by an error or mistake that wasn't my fault. Yes, Catherine says it pays to keep an eye on your report. I found an ex of mine defaulted on his loan and tried to make me responsible. Trifling. I had proof that I was not responsible and was taken off my report. Okay, that's what I like to hear, right? So you want to do that. So homework assignments for everyone watching right now. This weekend, tonight, tomorrow, I want you to go to annualcreditreport.com and pull that credit report, right? So you're going to walk through and make sure everything is accurate. Okay, so now we have some tools for monitoring your credit and any error detection. So free options, I like to give free and paid, right? We like to give everybody an opportunity to have access. So you can use Credit Karma or Credit Sesame, and what they will do is provide you free credit scores and reports. You also have the paid option, which might go a little bit more in depth with MyFICO or Experian, that offer you alerts. And then they also offer identity theft protection. So if you know, like, okay, I'm constantly having errors, I'm constantly having to do this, especially like in my family, like I said, I have a very common last name, errors happen often. You may want to have those alerts so you can bring, because it's just like, okay, I can't check my credit report every single day, but I want something to help me able to do that. The second option you have is fraud alerts and freezes, right? We recently, not too long ago, had that big credit score leak, Social Security leak. So if you know that you've been impacted or you suspect you might be impacted, you can do a fraud alert where you request fraud alerts to notify lenders to verify your identity. And then a credit freeze restricts access to your credit report to prevent any future fraud, right? So if someone's trying to, let's say, open an account, but your credit is frozen, they won't be able to do so because you will be alerted and it will say, hey, are you trying to open this account? You would have to provide all this other personal information to unfreeze your credit so that that application will be able to go through. And then for ongoing monitoring, you're going to check your credit report. Like I said, if you want, if you're like, okay, I checked it, I like to do semi-annually, but you can also do annually. You want to set up alerts for new account activity and review monthly, definitely, your credit card and loan statements for any errors or unauthorized charges. I call it a money date. I sit down, I look through my credit card statements, I look through everything. I'm like, okay, everything's spot on. All those charges were me. I need to chill out. And if I see anything suspicious, I'm just like, okay, now let me call up and see what's going on. Okay, we with me? I like the energy and activity in the chat. Let's keep it going. Okay, now I do want us to understand our rights. I am very, very big, especially when it comes to our money. And especially when it comes to our finances, we need to know what is and what is not allowed so that we know exactly how to approach it, right? So we're going to talk about a couple of the protections that you absolutely have and that you want to be familiar with in case anything starts getting a little fishy and confusing, okay? So the first is called the Fair Credit Reporting Act. You will see it oftenly, you will see it often called the FCRA. Now, the purpose of the FCRA is to ensure accuracy, fairness, and privacy of information in your credit report. which means it cannot be leaked and shared all over throughout your financial institutions, right? So whoever is your lender for your mortgage can't just give out your credit information to anybody, right? That's not how that works. The overview, so free access to your credit report, like I mentioned on the website that you can go and pull from, the ability to dispute incomplete or inaccurate information, and notification if information in your credit report has been used against you. So if you are denied credit, they need to tell you why. Right? They can't just say, no, you have to be told and explained why you were denied this credit. The second practice that you need to be familiar with, or second act, I should say, is the Fair Debt Collection Practices Act. So the FDCPA. Finance is a lot of letters, in case we didn't know. So there's a lot of acronyms, a lot of letters. And so the purpose of this act specifically is to protect you, the consumer, from abusive debt collection practices. And I really, really, really want you to know and understand this, because a lot of times we will find that people are very nervous, frustrated, anxious, embarrassed if something ends up in collections, because they feel like, I made this mistake, this was all my fault, and so now they can do whatever they want with me. That's not true. Okay, that is not true. They cannot bully you. Yes, they have the right to go after and collect the debt, but they cannot come after you in your place of work and things like that, right? So some of your protections under this act, debt collectors cannot harass, threaten, or lie to you. You have the right to request validation of the debt, and you can send a written request for them to stop communication unless it is completely, absolutely vital. Okay, so do not feel like simply because I lost track of this debt or I made a mistake. We all make financial mistakes, but just because this happened doesn't mean you do not still have rights. And then the third thing that I really want you to be aware of is the other protections, which are a bit more minor but still important to know, is the ECOA, which is the Equal Credit Opportunity Act, which prevents discrimination in credit decisions, and the Credit Card Act of 2009, which protects against unfair credit card practices such as excessive fees. Thank you. I see some really great comments in there. We're rocking. I want to make sure we're getting through so we have time for your questions. Okay. Now, if you have a loan or a debt that you need to negotiate or you're having difficulties, you do have the right to negotiate with your creditor. And again, this is something where people might feel frustrated, confused, or embarrassed, but you want to feel confident in knowing that this is something that you are allowed to do. Yes, will this presentation be available after completion of the live? We will have a replay for you in 48 hours. Yes, so don't worry. Okay, so first is prepare before you contact your creditor. So you want to gather information, know your account details, current balance, and payment history, understand your financial situation. So you want to calculate what you can realistically afford to pay. And the reason you want to say realistically is because you're going to present that number. And if they say, okay, yeah, pay it, and you don't have it, that's going to cause another issue, right? So you want to make sure you can realistically afford to pay this option. Then you're going to have a negotiation request. That can be for lower interest rates. That can be to create a payment plan. That can be for a debt settlement. That can be for a goodwill adjustment. But you need to know exactly what it is that you're requesting so that, again, if they say, okay, great, yeah, we're going to do a debt settlement and we will settle your debt for $40,000, you're just like, whoa, I didn't think that would work, or whoa, I didn't think they would say yes. And now you have to find the $40,000 to pay so that the rest of the debt could be settled. So for lowering your interest rates, you can ask for a rate reduction to make payments more manageable. For payment plans, you can request a structured plan to spread payments over time. Settlements offer a lump sum to settle the debt for less than the full balance. This is where this comes really important, where let's say you owe $80,000, and then for here where I said, what's your financial situation? You can afford to, let's say, pay 40. You come to them and you say, I can pay 40, and they say yes, they're going to want that 40 in one lump sum payment. Okay, and then goodwill adjustments ask to remove a late payment from your credit report if your overall history is good. So if you've been with, let's say, a company for 10 years and you've missed maybe 2 payments over the 10 years, you can ask if they can remove those 2 payments because you've paid over the last 10 years, everything else has been on time. That third step, how to make the call. So you want to be polite, but you want to be assertive, right? Remember that you are speaking to a human on the other side. I always say approach with grace and kindness, explain your situation and your willingness to pay, right? So you have a couple of suggestions that we have here. So I'm committed to resolving this debt, but I need a more manageable terms, or can you help me work out an agreement that benefits us both? You really want to make sure that you're leaning into how can we kind of bring a resolution to this debt, to this situation. And every single thing, especially in finance, get it in writing, okay? Once you reach an agreement, request that it is sent in writing before you make any payments, because you never know what could happen. They could say, okay, yeah, great, we'll do this. And then tomorrow you call in and they're like, we never said that. Or the person you spoke to no longer works here, right? So get everything in writing sent to you before you make that first payment. Okay, so we are in the strategy section for handling debt collectors and collections. The first step is really understanding your debt, and this comes from someone who paid off $100,000 in student loans. I did not even understand that I was on an interest-only payment plan for the first 5 years. So I was making payments every single month, and my balance was going up. So you need to understand your debt. Understand that the debt is valid and accurate, and request a validation letter from the collection agency. You want to make sure everything is correct. You want to make sure the balance is correct. You want to make sure the interest rate is correct, because a lot of times we can end up in autopilot, especially when we are adulting and have all other life circumstances we're dealing with. And you're just like, I'm paying this payment, or I missed this payment. I don't know what else is happening. After you really fully understand the debt, you want to then know your options. Paying in full is an option that will clear the debt, but it may not remove the collection account from your report. Okay, negotiating a settlement, you would agree to pay less than the full amount owed. That would also be showing up on your credit report. And then pay for delete agreement, which you negotiate to have the collection account removed after payment. So these are a couple of different options, and you can ask them to explain those options. You can ask them to tell you what they are willing to do, how they're willing to meet you in the middle, so that you can know, okay, this is how it's going to show up on my credit report, and this is how it's going to impact my credit score. Okay, and the third tip for dealing with collectors, one, like I mentioned, stay calm. We are all dealing with humans. We want to lead with grace and kindness. Know your rights, okay, especially the FDCPA, and then keep records. Document all communication agreement in writing. A lot of times people can say things, but unless it is in writing, it is all just hearsay. All right. And one major tip I have for avoiding is ignoring collection notices. Don't ignore. That's always our first step, right? I know for me with student loans, I was just like, well, if they can't find me, they'll find you. Okay, so you don't want to ignore them. You want to make sure that you are actively speaking and communicating so that you can stay ahead and have as many options as possible. And then do not make promises that you can't keep, right? Especially when it comes to payment. So if they are willing to meet with you and speak and negotiate with you, do not make a promise that you simply just cannot keep. Okay, so you want to stay as true and honest to your financial circumstance as possible. Resources and tools. And don't be afraid to talk to creditors. I love that. Okay. Snowball method. Damien, I like it. Damien mentioned the snowball method, which someone asked, what is that? So snowball method essentially is paying off your smallest debts. And then once you pay off that debt, you use the extra money from that debt being gone and you put it into your next smallest debt. So this helps kind of create a snowball method of paying off your debt and kind of giving you a nice little quick win, essentially is what I call it, right? So my first debt is gone. I'm excited. I'm motivated. I'm going on to the next debt. Okay, resources and tools to help you build your credit from scratch, right? So if you are like, I don't even have credit, girl, like I'm here trying to learn from the beginning, I got you. Rebuild your credit after setbacks, because adulting happens to us all, and then develop healthy credit habits. So we're going to start with people who are starting from scratch, but this option also works really well for people who, we started, it was like, oh my God, I got a credit card in college, but then I didn't know what I was doing. I kind of need help to reset things just to get things going. So that is going to be starting with a secured credit card. A secured credit card is just about the same as a traditional credit card. However, here is the big major difference. Your credit limit is based off of your deposit, right? So you put a cash deposit, and that is going to be your credit limit. So if you put down a $100 deposit, your credit card is going to have, your secured credit card is going to have a $100 limit. If you put down a $500 deposit, your secured credit card is going to have a $500 limit. And what I love about that, especially with OpenSky, you can use it the same way you use a credit card. So you can put it on your phone to, do like the quick payment when we go out, because everyone's paying with their phone. We never take the card out anymore. You can use all of these things. So there are 3 options on OpenSky that will kind of meet you wherever you are. So that first option here is great for those looking to grow their credit, and that is the OpenSky launch card. Then there's the option that is great for people who are looking to rebuild, right? So like I said, you opened a credit card and you're like, oh, I didn't really do that in a really healthy way. But then now I am getting the OpenSky Legacy card and I'm going to rebuild. And then people who are just starting fresh, right? So if I am Gen Z, I'm 19 years old, or I, never had a credit card and never had a student loan, this option, the OpenSky Plus, is great for people who are new to credit. And on average, right, so if you are looking to see, because people, whenever I speak with people, I want to build my credit fast. I want to move quickly. I want to do, let's get the ball rolling. OpenSky cardholders see an average 47-point increase in the first 6 months. So if you know that you're looking to see, hey, I need to make sure, in August, right, in 6 months from now, that I'm seeing some movement, because at the top of next year, I want to buy a car, or in a year and a half, I want to start looking to buy a house. This is a really great start for you to start seeing that movement and motivation to start really rebuilding your credit from the ground up. Okay, now the benefits. I am a credit card, points, benefits, all kinds of things, right? So I really love cards that come with perks. That's just my thing, right? So you get 0 fraud liability, same thing you get with a credit card. Okay, everywhere Visa is accepted, you can use your OpenSky card, easy to use mobile app. My favorite part, because points is my thing. You get up to 10% cash back rewards, cash back points. I really love the fact that you're getting this benefit, even though you're learning to build your credit, right? Because it says, if I'm rebuilding my credit, I still want to get the points. I still want to have that same experience. Okay, another option that you can do, and this is really great for people who are trying to build length of credit history, or if you have kids and you're trying to build length of credit history, you can become an authorized user. My best friend was an authorized user. I didn't even know what that was when I was 10 years old, but her mother made her an authorized user on her credit card when she was 10. So her length of credit history, she's been building since she was 10 years old. I started building my credit history at 17 with my first student loan. So if you are trying to build credit, whether you're young, 10 years old, or trying to, start up, you can become an authorized user. And how it works is you're added to a trusted friend or family member's existing credit card, whatever credit card they have. And the benefit is their good behavior and your good behavior when it comes to credit helps build your credit profile for both of you. So them using their credit card responsibly and you using that card responsibly helps benefit both of you. And I love a twofer, right? So that is another option you can use besides a secured credit card if you were trying to build your credit. You can honestly do both and really build it dually at the same time. The third option that you can take, right, because we're putting all the tools and tips into our backpack, into our arsenal, is to take out a credit builder loan. You can do all 3. You can start with your secured credit card, you can become an authorized user, and you can take out a credit builder loan. Now, how a credit builder loan works, very similar to a secured credit card, is you are going to have to make a deposit. But unlike a secured credit card, you're not putting that deposit all down in one lump sum. You are making monthly payments, and by the time you pay off the balance, that's when you get the loan, right? So it's in reverse. So for example, if I go and take a credit builder loan for $1,000, I'm going to make monthly payments based off of how the bank splits it up. I'm going to make monthly payments every single month until I pay $1,000 into this loan. And then once I hit the $1,000, the bank says, hey, here's your $1,000, right? So now I've been making payments, which we know payment history is the biggest factor in how our credit score is built. I've been making payments and I have this loan, but I don't owe any money on it because I've made the payments up front. So if you know, like I said, I want to build my credit quickly. I want to start making movement. I want to start seeing progress. We want to start with that OpenSky secured card. We want to become an authorized user, and then we can take out a credit builder loan as we are working towards our goal, right? As we were saying, I'm buying that car in a month or in a year. I'm buying that house in a year and a half. We have different options. And the last, I believe this was the last option I gave, use rent and utility reporting services. So how it works, services like Experian Boost allow you to include on-time rent and utility payments in your credit history. And I love that because we pay rent and we pay utilities every single month. We should be rewarded for that, honestly, right? So if you use a service like Experian Boost, they will report your on-time payment for your rent and your on-time payment for your utilities every single month to the credit bureaus, the same way that your credit card would report your on-time payments, and that would count into 35% of your credit score. So you have these tools and tips that you can use. Literally, you can start all tomorrow. You can start all of them tonight if you want. Get started, do the applications, get them going if you want to start seeing that movement. Because in 6 months, in a year, you will say, look back and say, I'm so glad that I took these steps that helped me rebuild so I can reach that next financial step. Okay. Now, if you are saying, listen, I understand credit, I've had a lot of financial setbacks, I've had a lot of issues with money because the economy is tough. Life, can be really difficult. There are a couple of things that I want you to focus on. So you're going to start with that secured credit card. OpenSky credit card doesn't require a credit check to apply, right? So it's making it a lot more accessible for people who are looking to rebuild. And it helps rebuild credit by establishing that positive payment history. Then you're going to address any negative items on your credit report, right? So whether that's paying off collections, negotiating with collections, setting up a payment plan with collections, you're going to do the actionable step in getting ahead of it instead of letting them kind of chase after you, right? Because that, like I said, it can be overwhelming. And it's just like, well, now I know the things that I can do. Now I know the things that I can negotiate. This is the things I'm going to do in order to start seeing that movement. You can request a goodwill adjustment, right? If you've only made one late payment or two late payments over a long history of time, then I highly, highly, highly suggest asking for a goodwill adjustment. The worst they can say is no, but you want to ask to see. The third option, you're going to focus on payment history, and that could be with multiple different things, right? So that could be with the authorized user, that could be with the credit builder loan, that could be with Experian Boost. Anything that is going to be reporting that you're paying for things on time is going to be something that you want to focus on. And then monitor your progress. I also love to reward myself with progress. That doesn't mean I'm going out and blowing a bag. That doesn't mean I'm going out and spending thousands. Sometimes it means I'm going out and just getting myself a pizza. Right? Or sometimes it means I'm going out and just like getting my hair done. So you want to monitor your progress, and that could be, putting like a tracker on the wall, putting a tracker on your phone, whatever, but monitor your progress and celebrate your small wins. Even if that means your score went up 10 points, that's a win. If your score went up 20 points, that's a win. If your score didn't change and it didn't go down, that's a win, right? So monitor your progress and really celebrate all the things that you are doing, because it can be really hard and overwhelming if you're just focusing on like, these are the mistakes I made, right? We're moving forward from those mistakes. And some healthy credit habits for long-term success. So one, automate as many payments as you can. I know that is a very adult thing. When I started to automate payments, I was like, wow, this is adulting. Automate as many payments as you can, because we are busy. Life can be hectic. Sometimes we simply forget, right? We have the money in the account, but we're like, oh my God, I forgot. Like, I just did not remember. And if you don't want to set up automatic payments, which is okay, set up a reminder in your phone, right? If you're just like, I don't want them going and pulling the money out, because sometimes that could feel a little overwhelming, set up a reminder in your phone, like, hey, every 31st, I'm supposed to pay this credit card. Every 15th, I'm supposed to pay this student loan. Okay? The second thing, keep balances as low as possible. You want to aim to use less than 30% of your total credit limit and pay down the balances regularly. Again, this is whatever is possible, or you can make payments that work within your budget. The third, avoid unnecessary credit inquiries. You can't just say, I'm not going to have credit inquiries. We all need to do something at some point that is going to require a credit inquiry. So you want to limit your applications for new credit to avoid hard inquiries that will temporarily lower your score if they are unnecessary. Fourth step, review your credit reports regularly, which was your homework. So I know when we get off this workshop, you're going to be doing that. You're going to pull up a report. 5, establish a budget and emergency funds. An emergency fund is so important. It essentially saves you from landing in further debt, right? So you want to manage your finances and anything. And I'm not the type of person who will say, cut up everything that you don't need and just save, save, save. Like I mentioned, I love pizza. I love to go to Sephora every now and then. So you want to make sure that you are still enjoying your money, but you are creating a healthy habit of, hey, every check, I'm going to put $50 aside to go towards my emergency budget. Or I'm going to put $25 aside. Whatever you can put aside or whatever you can sacrifice temporarily to build that emergency fund will help you in the long run to avoid landing into any new types of debt that may harm your credit score. And then number 6, which is so crucial and so important, is to be patient. Credit improvement takes time. There are steps you can take to move you from point A to point B quicker, but it doesn't mean that we're going to go from a 500 credit score to an 850 in 5 minutes, right? That's not going to happen. So you want to be patient with yourself. You want to celebrate your wins. Any movement towards your progress, towards your goal is a win, right? So we're celebrating small, consistent actions that will lead to big results over time. And I'm going to end right here. I want to thank you so much for joining me on a school night, on a work night. And I know there are a ton of questions coming in, so I'm going to be catching up. If you do have questions, drop them in. So I'm going to read them. Okay. All right. So I have a question from Paul that says, are credit repair companies like Lexington Law worth it? I don't have hands-on experience with Lexington Law. So what I will always say is before you look to an outward company to repair your credit is to always look at the things that you can do for yourself. One, they help you kind of learn what's on your report. They help you learn how to do it yourself for free. And you also can keep track of it a lot more. So I say anything you can do yourself first is really worth looking forward to doing, and then you may potentially look into an outward company. But since I don't specifically have experience with Lexington Law, I really can't speak on them, but I do suggest trying it out first on yourself, by yourself, and then really leaning into getting some extra help. Abby, okay, in terms of hard inquiries, opening new cards, is it bad to open one new one within those 24 months? I don't think it's bad. And I think what's important is if it is necessary or if it's something that you really need in your financial circumstance, it is important to open it. So like I said, hard inquiries, that's only going to be 10, 15%, right? It's not going to be a really big impact to your credit score. So don't shy away like, oh my God, I don't want to get a hard inquiry. You just want to be mindful that you don't want to have too many. So if you're opening one credit card every 2 years, it's not the worst thing. It's not the end of the world as long as you are navigating that really well. Another option that you can look into if you're like, okay, I really want to have a higher credit limit, you can ask your current credit card if they were to increase your credit line. So you don't necessarily have to open another card if you don't feel like it's necessary. But if you do, I think it is completely okay to open a new one as long as we're not doing it excessively. Okay. So someone asked about filing bankruptcy. So filing bankruptcy has a lot of intricacies. I know a lot of people often ask about bankruptcy. Filing bankruptcy has a lot of intricacies that you really want to speak to a professional about. There are different types of bankruptcy based off of your financial circumstance, right? There's Chapter 11, there's Chapter 13. So it's really important to speak to a bankruptcy professional to walk you through those steps. So since I do not know your specific experience, I would not be able to really navigate that. And there are specific debts that I know for certain that aren't removed when it comes to bankruptcy. So you just want to, again, speak to a professional and make sure that they walk you through and look through your financial steps specifically so that they can give you the proper advice and guidance. But that is a good question. Mark said, I like the OpenSky card, as do I. I think it's really great for people rebuilding their credit. Okay, is there a sweet spot of when to close a card and or open a new one? Like how long should I have a card before closing it? I like this question. So like I mentioned earlier in the workshop, if you do not have to close the account, if you don't have to close the card, don't, right? And I know sometimes people are like, if I don't close this account, I'm going to spend, I'm going to do all these things, then close it, right? If it's going to negatively impact you, definitely close it. But if you know, like, I've paid this card off, I'm not going to use it anymore, but it's not harming my credit score, and I've had the card for a very long time, you can put it in your freezer, put it in a drawer, and just never use it. But now your credit length of credit is still growing. And if it is a traditional credit card and has a line, like a credit limit, that is also adding to your credit utilization. So if you have a card with $10,000 limit and you're never using it and you put it away, you still have that $10,000 added to your total credit, as opposed to if you close it and now you have less credit available, which means anytime you use your other cards, your credit utilization percentage is going to be higher. So if you are okay with having it open without using it or without excessively going back into debt, keep it open. You don't have to close it. And when it comes to opening new credit cards, I absolutely feel that it is based off of if it's necessary for your lifestyle, right? So if it's important for your choice, then you absolutely can open one. I know sometimes, like, for example, when I was 18, I was like, I'm just going to open one because that's what my college tells me to do. And the next credit card I opened was because I wanted to finance a laptop, but I knew I had the money to do so, but I wanted to earn those points, right? So that was how I decided to get a second card. So you want to make sure you have a reason you're opening the card and you have a plan on how to pay any of the charges you put on it. So that's really the best rule of thumb when it comes to opening and closing any lines of credit. Catherine says, when you close a card, you will see a dip in your credit score. Definitely. I hang on to my OpenSky card since it is my oldest credit card. Okay. And then, for example, I just hit a longest card anniversary and saw a 24-point bump on my credit score. Catherine girl, okay. I love to see it. Yes. So the longer you keep the card and the better you use it, right? Really great financial habits. It'll be a benefit to your credit score. Thank you for sharing that, Catherine. I love that. Let's see. Is it good to increase your credit limit every few months with OpenSky? I would say yes. And the reason for that is for credit utilization. If you know that you can responsibly use that credit increase and you are improved for the credit increase, there's no reason not to have it, right? Because 99% of the time, right, there's always an exception. 99% of the time, that is not going to be a hard inquiry. You already have that account with that company. And so if they say, yes, you can get the line increased, and you're like, okay, great, I'm not going to spend more money and I have a plan for how much I'm going to spend and pay back, it is an amazing idea to get an increase in your credit line, because now your credit utilization percentage, that formula, will be lower, helping your credit score in the long run. Good question. Damien asks, is Vantage score not worth it? My bank uses it, but my lender uses FICO, but my FICO score is lower than Vantage. Mine too. So just for anyone who may not be familiar, there are a ton of different scores. The most popular two are FICO and Vantage, and they will look at different things. That's why the scores are often different. And so you want to make sure whenever you are applying for a loan or from a lender, so like Damien mentioned, what score is your lender using? A majority of lenders use FICO. So I like to say to focus on the parts that go into the FICO score. So you want to make sure, like I said, payment history, credit utilization, those are the primary two you want to make sure are in good health. So I really wouldn't focus on, if I'm applying to a lender and they don't really get your Vantage score, that is not something that I would really focus on worrying about. So you want to worry about the type of score that the lender is looking. And like I said, most of them are looking at FICO. So I wouldn't say that the Vantage is not important, but I would say just to focus and worry about the score that you often see people or lenders are asking you for. Okay. If a card has a $200 limit, but I use 180, is it okay to pay it all off before due date? It's hard to use 30% utilization on a low amount card. I love this question. Here's why. So like I mentioned in the beginning, when it comes to the due date and the statement close date, so let's say, okay, I have a card with a $200 limit and I put $200 on it, but I paid the complete $200 off before the due date. I paid off even before my statement date. Now, when that credit card company goes and reports, they're not going to report that I have the $200. They're going to report it zero. So my credit utilization is going to look amazing. It's going to be zero, even though I did technically max out the card. So that's what you want to be mindful about. I love that clarifier. Be very mindful. So if I'm using up this credit and I pay it off before my statement date, what's being reported is the balance on the statement date. Okay, so that 180 that you put on is not what's going to be reported. So they're not going to say, oh my God, they're using 90% credit utilization. They're going to show you have on-time payment history and that your credit utilization is 0. Okay, we have time for one more question. Someone told me I should be using credit cards and not debit cards. What are your thoughts? I think that's a very personal decision. I've heard many in the finance world people talk about that. I think you have to choose what works best for you. So I don't use a debit card personally because I use the credit card for all pretty much everything. I have a checking account so I can go and, of course, pull money, but I do not have a debit card. However, I know that some people don't have a credit card, or they don't like using credit cards, or they feel like credit card might make them just spend over and they want to make sure they're spending what they have in their account, so they choose to use debit card. So it's a personal preference based off what your financial circumstance allows and just what you prefer, what you enjoy. There is no con to using either or, as long as you're using either or responsibly and healthfully. All right, we are at 8 o'clock. I loved having you. So just a little housekeeping, very, very quick. You will be getting the replay in the next 48 hours, so keep an eye on your emails. And of course, please feel free to connect with me in my newsletter on Instagram if you like long form content. It was such a pleasure having you this evening. Thank you so much for all the amazing questions and all the engagement. And I will see y'all somewhere on the internet. Thank you so much to our sponsor, OpenSky, and have a great evening, everyone. Bye. Good night. Thank you for joining me. Bye.